Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that are expected to be causing movement in prices. So we'll be focusing on the main event, which is the ECB rate decision. So once we cover these, we'll also be looking at the outlook of the non-farm payrolls, which will be happening tomorrow. And after that, we'll be doing some technical analysis to try and understand the current market structures as well as where the markets might be headed next. So once you join in, kindly say hi in the live comment section, and these will confirm that everything is working just fine. So as usual, I'll begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should all do your own due diligence. Of course, practice proper risk management. So shout out to Paul Carey for being the first person to join the session and say hello in the comment section. So hello, Margaret. You can see Maureen, Ronohirari, Edward Kamau, Ibzan in the house. Irene Karaoke, Nderi, Leonard, Edwin, Ken Mwaneki, MBH, and Mark Washira. So let's get things started. Today it's a bit different, and as you can see, I'm beginning with something that is already happening in the market. So we are looking at some technical analysis here, and we can arguably say that for the last 2 days, gold has been moving sideways, and today being the third day, this is all we are seeing. So more of a sideways momentum in gold, and currently we are on a downswing. So if I was to do an indicator here, I would just use a very simple indicator. It doesn't tell you where the market is going. So this is not the purpose of adding an indicator here. It's more like helping you understand the swings. So currently we are on a downswing from the upper side. So currently moving towards the lower side. We have already cleared the Asian low. And during the London, as we head into the New York session, it seems likely that we will be completing this move and getting to the lower side of the range, somewhere around 29.02. Though right now we are seeing a lot of volatility, very strong momentum in the last couple of minutes. I would say this is 1492 points or 149 pips. So we have seen this happen in gold over and over again. Yesterday it happened. We had such a strong dip and the market recovered during the New York session. So also strong likelihood that today we'll be seeing something similar. In this case, the market making another swing towards the lower side of the range. That's around 29.02. So we're also seeing something similar happening with US equity indices. So after a strong range, sideways momentum that happened during the Asian session. Now, as we enter London, we are seeing a breakout happening here, indicating that now we have a direction for the London session, which indicates more sell-off in US equity indices, especially for the Nasdaq. So we could be seeing some more bearish momentum. So it's also happening in the US 30 or the Dow Jones index. And also in the SP 500 index, we have seen the strong breakout here. So perhaps some more momentum during the London session. So outside of that, I believe we can now jump back and try to understand what are the prevailing market movers. So beginning with the economic calendar, as you can see, today being Thursday, we have quite a number of things coming up, but I would like to take a step back and first check out the work that we saw on Wednesday. So first of all, we had CPI from Switzerland, which came in at positive 0.6%, much higher than the expected 0.5%, and a big jump from the previous reading of negative 0.1%. So this came after the speech by US President Trump, where he discussed the potential for doing more tariffs against Canada as well as Mexico. At the same time, he decided that there's a good chance that he might ease the tariffs on the two countries. However, as for China, we are seeing an accelerated trade war where he implemented 10% more sanctions on China leading to increased market volatility. So what I want us to notice today is the big shift in the ADP. So the ADP, or automatic data processing non-farm employment change, or non-farm payrolls. In the previous reading, we had 186K. We expected 141K, but we got almost half the expectation, 77K. So there is a reason this happened. If you look at the previous data points, we have averaged over 100K, I would say, for the last 5 months, from 143K to 233 to 146 to 122, 183, and now a big shift down to 77K. And this should tell you a lot about what to expect on the non-farm payrolls that are happening this Friday or tomorrow. So then we had the final services PMI coming in better than expected, showing that the service sector in the US is strengthening and now in expansive territory. So for the ISM services PMI, also a big print, 53.5, which was a big improvement from the previous reading of 52.8, showing that the service industry is currently very healthy in the US economy. So in this case, no worries over recession, but we could be seeing Trump driving the US economy into a recession, given what he's doing to the markets and also what he's doing to the job market or to the job industry. So for today, the main event after the Euro Summit, which happens all day, will be the ECB rate decision, or the European Central Bank interest rate decision, where we're expecting a 15 basis points rate cut. So this is expected to drop European interest rates from 2.9% down to 2.65%. So this is quite concerning. So if we see the ECB cutting rates, then for the Euro bulls, we could be seeing the Euro taking some step backwards, given the strong rally we have experienced over the week and last week. So later on, after the decision, we will be looking at the monetary policy statement from the ECB, and then a press conference at 4:45 p.m., which will give more indications onto the direction of ECB monetary policy. So this is expected to cause extreme market volatility for Euro pairs as well as European equity indices. So later on, we'll be looking at the Ivy League Purchasing Managers Index from Canada at 6 p.m., where we're expecting an increase to 50.6, up from the 47.1 number reported in the prior month. So this could cause some medium volatility in CAD pairs, and then speech by ECB President Lagarde at 12:30 p.m. So this will be tomorrow, just after midday. So then we will look at the employment change in Canada, where we're expecting that the economy created 19.7K jobs, down from 76K jobs, and the unemployment rate is expected to have spiked higher to 6.7%, up from 6.6%. So as for the main event of the week, we'll be looking at the job data from the US. So average hourly earnings or wage growth is expected to have accelerated by 0.3%, a slowdown from the previous increase of 0.5%. So as for the non-farm employment change, we expect 159K jobs to have been created in the month of February, up from 143K in the month of January. So the unemployment rate is also expected to remain the same at 4.0%. And then after this, we'll be closely following the Powell's speech at 8:30 p.m. So Fed Chair Jerome Powell is due to speak about the economic outlook at the University of Chicago Booth Business or School of Business US Monetary Policy Forum. Of course, there will be audience questions, and these raises the stakes for the speech. So whenever you see audience questions, basically means that we could be seeing fireworks in the market reacting to Jerome Powell's responses. So don't be overly focused on the Fed Chair Powell's speech. More volatility will be experienced earlier at 4:30 p.m. when we eventually get the official non-farm payrolls. So one key thing I want to highlight about the non-farm payrolls is an article I had written yesterday concerning this number, because there is some form of expectation that we have for this Friday. So Being the NFP week, there's a lot to process before Friday, and let's look at the numbers. So according to Forex Factory calendar, as we have seen, we are estimating around 159K jobs created in the US economy in February. And remember, this is excluding the farming sector. That's why we call it the non-farm payrolls. What's new? In February, the Trump administration fired or put under administrative leave over 30,000 federal employees. And this is expected to impact the non-farm payrolls numbers. So, in summary, we had 67,000 employees from the IRS, or the Internal Revenue Service, which is the equivalent of KRA in Kenya, but now for the US it's IRS. So these guys were fired in February. Then 2,300 Department of Interior employees were fired, of which 1,000 were from the National Park Reserve or National Park Service, and 420 from the US Fish and Wildlife Service. So 3,400 people were fired from the Forest Service employees, and from the Forest Service. And as we continue, you'll notice that more and more people are fired. So from the CDC, or the Center for Disease and Disease Control and Prevention, we had 1,300. This was a typo. It's not 1-3,000. It's 1,300. Then 2,000 people fired from the Department of Energy. This includes people who are working in the National Nuclear Security Administration. Over 850 healthcare professionals from the Indian Health Service are also fired. So I know you might be wondering, how is it that we are counting people from the Indian Health Service? So that's the name of the health service in Indiana, not India, the country. So 200 employees from Transportation Security Administration, 132 from the Federal Aviation Administration, and 2,000 from USAID employees based on administrative leave, with further layoffs anticipated. So this data may not be 100% accurate, mainly because the Department of Government Efficiency, which is headed by Elon Musk, is still an ongoing project, and they're implementing more firings as they try to bring in more efficiency to the US government. So we know that some of the employees are already getting rehired, and this Friday's non-farm payrolls could have a wider gap compared to the expectations. And of course, we know that the gap could most likely be on the lower side, mainly because we have already seen a leading indicator, which is the ADP non-farm payrolls, which reported almost half the expectation at 77K. This was a big disappointment, and the market may already be pricing this in. So in addition, the IRS is planning to cut its 90,000 workforce in half, meaning about 45,000 more people could lose their jobs in the near future. So if this kind of firing, as they try to achieve government efficiency, leads to an increased unemployment rate, then Jerome Powell will have no option but to obey his mandate. So the mandate of the Federal Reserve is to maintain stable prices as well as full employment. So the last time we saw the Fed changing directions in interest rate decisions was back in September last year, when unemployment spiked higher to 4.3%. So when this happened, the Fed implemented a 50 basis point rate cut. So as of now, we know that the Fed chair is still fighting high inflation in the US economy. And as a result, he has chosen to maintain rates still significantly high. And his policy has been, we wait for more data until we see confidence that inflation is moving to 2%, so that we can continue with the rate cuts. However, as for Trump, his bulldozing policy, and in this case, he is basically saying directly that he wants Jerome Powell to cut interest rates. So now that he is implementing the Department of Government Efficiency and firing more people, we expect this to cause a spike in unemployment rates, which would force Powell's hand to cut interest rates. So that's the overall expectation in the market. So the big question is the market waiting for Friday's numbers to short the dollar index, or the DXY, or has the market already acted on this information? So of course, if we check our charts, we'll notice what has been happening with the dollar index, which basically indicates that the market has been already pricing in this information. So as we continue, if you have any questions, feel free to type them in the comment section, and I will be responding to these questions as we continue. So I'll be looking to get more updates, but also there's one more update that is worth our time today. So kindly give me a sec. So the chart we are looking at here is the chart of the Japanese 10-year treasury, or the yield on the 10-year JGBs, or Japanese government bonds. So far, we have seen a big increase since the Bank of Japan started flirting with positive interest rates. So for a long period, we have seen the Bank of Japan maintaining rates at negative 0.1%. But then now we are looking at a potential where the Bank of Japan is expected to hike interest rates. And as a result, we are seeing a very strong reaction in the market. So I'll try and share this. So just give me a sec. I'm trying to load this. So now you can see it here. So interest rates in Japan remained at negative 0.1% from 2016 all the way to 2024. So that's a period of 8 years. So from here, in Feb last year, we saw the Bank of Japan hiking rates from negative 0.1 to positive 0.1. Then another decision happened in July, where they hiked from 0.1 to 0.25%. And then in the most recent trading, they moved from 0.525% to 0.5%. So this rapid increase in interest rates basically led to a very strong rally in the Japanese yen, and this has continued boosting the Japanese government bond yields. So while interest rates remained at negative 0.1%, there was a cap on Japanese bond yields. So the Bank of Japan would not allow the bond yields to rally higher. So in this case, once they abandoned the yield curve control, we saw some changes. So we'll be trying to understand how this is impacting the markets. So as you can see, this has led to an increase in the bond yields. So from a point where it was at negative 0.22, this was in 2019, 2020. Now we are seeing the bond yields yielding 1.537. And this level was last seen during the last global financial markets crisis in the year 2008. So a very strong rally in bond yields tends to correlate positively in with the currency. So in this case, the Japanese yen is expected to continue with its strength. So how is the US counterpart faring? And I'll try and look at that so that you can have a comparison. So where I start. So these are the interest rates in the United States. So as you can see, over the past 10 years again, while the Bank of Japan maintained at negative 0.1 and then eventually rapidly increased rates, the Fed was holding rates at 2.5%, and then during COVID, it lowered it close to 0.25%, then rapidly increased from March 2022 through to July 2023, all the way up to 5.5%. And now we are seeing the Fed cutting rates. They haven't cut by much. So in September, that's when they had the first cut to 5%. Then in November, and then in December, they cut again. And this year, we haven't seen any cuts. So they are still holding rates at 4.5%. And as a result of this, we're also seeing changes happening in US bond yields. So let me try and find the US 10-year. I believe I had the tab somewhere. Okay, just open another one. So as you can see, with the US 10-year bond yield, site is a bit slow to load. Okay, let's use the CNBC one. So currently at 4.321%. Okay, now this is so distracting. Yeah, at least now we have something here. So I'll use the trading economics one. So we have had a strong rally in yields from September last year, which started at a bottom of around 3.6%. The yield rallied all the way up to 4.7%, and that was in January this year. So since the year started, all we have been seeing is the bond yields falling. So as a result of the strong fall in bond yields, especially concerning the Trump tariffs, this has led to much more weakness in the dollar, as we will check out on the charts later on the presentation. So outside of that, let's look at some of the highlights for the day. So businesses are told that the Fed that they will raise prices with onset of Trump's tariffs. So in this case, the businesses in the US that are being affected by Trump's tariffs, they have promised to raise prices. And businesses raising prices basically implies that we should be expecting a higher tick in inflation. So businesses, large and small, are signaling that they could raise prices with the onset of President Donald Trump's tariffs, even if consumers can't swallow it. At least that is the view of companies that participated in the Federal Reserve's latest Beige Book, which collects anecdotal evidence across the Fed's top regional bank districts. So what the Fed found in conversations conducted in February was that companies are having a hard time passing on input costs to customers. So business contacts in most Fed districts expected tariffs would cause them to raise prices. There are also isolated reports of companies preemptively raising prices as a preparation of what Trump is already doing to the markets. So CPI, we know that it peaked somewhere in September 2022, and since then it has been going down. But then if you look at the last 1 year, between 2024 and 2025, consumer price index has been mostly moving sideways. So in the most recent reading, core PCE price index was at 2.6%, and core CPI was at 3.3%. With a big drop in core PCE price index, indicating that inflation was moving in the right direction. Remember, core PCE is the Fed's favorite gauge or measure of inflation. So now that it's moving towards target, then it raises the likelihood that the Fed might be cutting rates in the next meeting. So outside of that, there's more news. Alibaba shares jumped 7% after unveiling latest DeepSeek rival. So Alibaba Group Holdings stocks are the most in weeks after taking the wraps of a model that it claims performs as well as DeepSeek with just a fraction of the data required. So China's e-commerce leader, which in 2025 jumped to the forefront of the domestic AI sector with highly benchmarked models on Thursday, open sourced the QWQ32B model. The platform marked a big leap over the previous version, using roughly 5% of the parameters or data units that DeepSeek's R1 employs. So this is a big improvement in AI, and of course we know that this is increasing the pace of competition between Chinese firms and American firms, and as a result, we should be seeing more volatility, especially in Chinese AI companies. So there's also the issue of the German bond route, which goes global as yields surge in Japan. So Germany basically announced a very big defense budget, which is going to be funded by deficits, and as a result, this led to a sell-off in their bonds. So Japan's government bond yields reached the highest levels in more than a decade, and yields in Australia and New Zealand also surged as the rout in German bonds reverberated through global markets. So the yield on the 10-year climbed to 1.5% in Japan, the highest since 2009, while the 40-year equivalent jumped to a level unseen since its inception in 2007. So government bonds in Australia and New Zealand followed the sell-off, with their benchmark 10-year yields both rising about 10 basis points, while treasuries slid for that day. So German debt has worst day since aftermath of Berlin Wall's fall. So apologies for that. So the rout comes after the 10-year German bond yield soared as much as 31 basis points due to a dramatic change in the country's spending plans for defense and infrastructure investments in response to the US pullback from its commitment to European security. So the euro had its best 3-day rally since 2015 ahead of the European Central Bank's policy meeting on Thursday. So we are now in the middle of a historic shift in economic and defense policies, said Hideo, senior portfolio manager at five-star asset management company in Tokyo. We can't be bullish on bonds until we see the direction of that shift. But markets are pairing wagers on further rate cuts by the central bank as expectations build around the scale of borrowing required to finance spending plans to counter the threat of Russian aggression. So if there will be more spending going into defense, then this basically will almost collapse the bond market in Germany. So the market is already reacting to this and causing a big panic in the markets. So that being said, we know that bond yields have an inverse correlation with currencies. So bond yields in the US are going down. The dollar, are going up now, but the dollar is collapsing for the last couple of weeks. For Japan, bond yields are increasing. The Japanese yen is increasing. Also, not negative but positive correlation. So bond yields in Japan, what we have seen, they are hitting record highs. Japanese yen strengthening. In the US, going down and the dollar going down, and now we are looking at bond yields in Germany impacting the euro. And this is happening ahead of the ECB rate decision, which is why I mentioned that we should be expecting to see a very strong reaction in the markets, especially on the euro-dollar pair. So let's get on with some charts as we head to the rear end of our presentation today. So clearly on the US 500, we already discussed this. The market has already made a big move since we started this session here. So that's why I saw it important to highlight that as we progress with the session, that we are seeing a sell-off again in the London session on the US 500, also happening in the Russell 2000. So a big sell-off is still continuing. We are seeing the US 30 and the NASDAQ 100 index. So as for gold, we have seen gold stretching. So we talked about this when the session was starting. So now I believe we are down what? This is an extra 50 pips. So well in as the market continues towards the support area around 2902. So pretty easy decision right there. So now we look at the European counterparts. Starting with the UK 100 index, and as you can see from the forward chart, it's a big sell-off. So in this case, we are seeing a strong bearish momentum. From the 1-hour chart, this is how it looks like. So the market just made a breakout at the beginning of this hour and it's accelerating lower. So of course, our target will be 86.81 price action level. So as for the other European counterparts, that is stock market indices, the EU 50 or the Euro Stocks 50 just hit a major resistance area. And after hitting this resistance area, notice the strong sell-off that ensued immediately after that. So using a smaller time frame, in this case the 15 minutes chart, the market hit resistance, immediately dropped. Now it looks like it's retesting, but overall we are seeing the sell-off potentially continuing, especially considering the major swings that we are seeing in this market. So good chance that we continue seeing a sell-off today. So the France 40 index, we have seen the market opening with more of an exhaustion gap. And after the exhaustion gap, notice how the market has crossed the gap and proceeded lower. So from the 1 hour chart, this is how it looks like. 4 hour chart, this is how it looks like. A market that is screaming more of an exhaustion and a pullback. So good chance that we see the market pulling back today. And of course, as we know, we are expecting the market to be retesting the previous lows. So as we head into next week, we should be looking at the market potentially retesting 8,029 price level. So the Spanish stock market index seems to be resilient today. So a little bit of an outlier here. So on the 4 hour chart, it continues with the recovery and an attempt to get back into a new all-time high. So we'll be watching closely to see what happens when it gets to 13,440 or 13,440 price level. So for now, we remain patient and see what happens, especially considering that in the last 1 hour, things were not looking so rosy. Things are just changing now. So for Germany, given what we have seen in defense spending, the market has reacted positively and the stock market index has hit a new all-time high. So in this case, we don't have candlesticks on the left. It's only the market pushing and pushing higher. So of course, we know that we buy on the pullbacks. So potentially, if the market retests the previous all-time high, then it will be a chance to buy even more. So any form of pullbacks should be taken positively. So now onto the metals. We have seen silver pulling back this morning too. So good chance that we continue seeing pullback and then eventually a recovery. So remember, long term for silver, it's still bullish, same as gold. So we expect gold and silver to eventually recover. So for now, as we were targeting this area as the key level support, we'll be observing to see if buyers start coming in and prices start moving higher. So the other commodity on the lookout is oil. And as you can see, Brent oil was having more of a sideways momentum in the morning. It opened with a gap. So notice that this was the price action of the market open, and this was still within a gap. So the market has just crossed the gap and attempted to move lower. And for the first time, we are trading at $69 per barrel since yesterday. And before that, we hadn't seen that happen. So the last time oil prices had hit these levels was around, this was September 11, 2024. Quite a unique date. If you look at the weekly chart, now we are trending in levels that we last saw here. This was in 2021, 28th November. So in this case, you can see more pressure to the downside as the OPEC has promised to expand their April oil output. And at the same time, we are seeing more pressure from Trump, drill more oil, open up more trade, and as a result, lead to more oil in supply. As a result, more downwards pressure on oil prices. So clearly, we should be targeting yesterday's low. This is a pretty much easy book pattern. We have already seen it happen. So you look at the last 3 days, the swing high positions, they seem to be perfectly in line. And now after the market got to this area, a sudden drop, which might likely lead to further sell-off. So as for digital commodities, we have already seen Bitcoin made a very strong bounce from 78,000. And now we are seeing Bitcoin hitting another hurdle yet. and this is a trend line that has been playing out since the February 21st. So now it has hit the same area, and chances are likely that it could be headed lower, similar to the previous two actions. So from the 4-hour chart, you can see what we are dealing with here. So this was a previous strong level of support, and now could be acting as the resistance as the market attempts to recover. So the dollar index is having a big sell-off here. Now we are at 104.076, potentially erasing all the gains it had made during the inauguration and Trump winning elections. So Trump won elections in November. So I don't know if my chart can load this. So you can see the December last year and the strong rally we got. Then the strong rally during the inauguration week. Then all those gains have been eliminated as Trump continues implementing more tariffs, and we see a lot of rotation moving into gold. So gold is currently on a very strong rally, and as a result of people going into the safe haven and people afraid of Trump tariffs affecting their stocks are also buying the safe haven. And as a result, we are seeing excess dollars in the market leading to a big sell-off. So this sell-off has basically meant that the other pairs benefit, like the yen has really gained against the US dollar. So the yen had a major support area here, which it attempted to break recently, failed and pulled back. That was on Tuesday. On Wednesday, tried again, and today being last day, it seems like it's all systems go. So from the 4-hour chart, this is how it looks like, and there's a good chance that we break below this area. And of course, we know that the breakout might lead to acceleration, so potential breakout on USDN would be a nice trade for the day. So for USD, we are seeing the strong rally and recovery from the previous lows. Of course, now the current target, we could be looking at a sequence of highs around here. So one being 0.63756 and then 0.64088. So now from the 1-hour chart, you can see that the market was struggling to break above this area here. From the 15-minute chart, this is how it looks like. So clearly, we are looking at a potential breakout here. So it's more of a flag kind of formation. And of course, if the market breaks, then an opportunity to go higher. So we'll be observing that closely to see if this actually happens. So strong rally in the Euro USD pairs. So on the daily time frame, this is the 4th consecutive bullish day. So on the 4-hour time frame, it's a very strong week. We have already seen a very strong rally in Euro USD. So from the 1-hour time frame, you can see that the market is struggling with the bullish momentum today compared to the prior 4 days. So now you go to the 15-minute chart, then you realize that something is cooking here. Clearly, this market has not been making much progress since morning. So good chance that we'll be getting a breakout later in the day. And this is expected to be after the ECB has made a rate decision. So in this case, judging by the prior lows from yesterday, it seems more likely that we will be getting a breakout here. And once the breakout happens, then we'll have a direction. My bet is that the euro takes a step back after the big rally we have seen over the week. So a rate cut would be negative for the euro. So good chance that we see some form of pullback before we see a continuation. So the overall long-term trend is bullish. So if we happen to see a pullback, then the idea is to start looking for longs later. So pound USD is still on a very strong trajectory. Today is the 4th green day, where we are seeing a very strong momentum upwards. So from the 4-hour chart, this is how it looks like. And from the 1-hour chart, you can already see there is an attempt to break even higher. So from the 15-minute chart, we know that this is currently the price action that we're experiencing. And of course, we know that at some point we'll be getting a breakout. So we continue watching the pair closely. So New Zealand USD still trending higher. So of course, the target is around 0.57707. So we expect the pair to complete the journey and get to the previous high. So strong bullish momentum still going on. And as for USD CAD, we are seeing the dollar losing some ground to the Canadian dollar despite oil being weak. And now from the last 15 minutes, an attempt by the dollar to gain against the Canadian dollar is met with more sellers coming in. So good likelihood that we see the USD CAD pair retesting the previous low. Of course, the pair has been affected by the tariffs a lot. So read into this kind of volatility where we have big swings up and down. So you have to be careful trading the USD CAD pair. So pound yen facing a very strong sell-off since this morning. So already attempting to hit yesterday's low. Of course, yesterday's low was the key decision point for the strong rally that happened later on. So now there's a good chance that we see the market retesting here and potentially breaking. So now that we are almost seeing the market completing this, the question will be whether we'll be seeing further selling activity towards 189.5. So I think that's all for the day. Chinese equities are also strongly bullish. So you can see for the last 2 days, the China A50 index has made a really strong rally, got to our target. But then the question is, are we going to see further momentum upwards, leading to the next target around 13,442? So for the Hong Kong or for the Hang Seng index, very strong momentum. This is the third consecutive day we are seeing a rally. And from the 15 minutes chart, you can see we have had little to no pullbacks. So the market has been just moving consistently higher. So as we approach the end, I would like to notify you that we have quite a good number of new products added to the system. So if you have been looking to trade, in this case, European BOBL futures, or basically German bond futures, then we have them on the platform. Clearly, you can see the big sell-off. We also have gold futures available for trading on the platform. So remember the other gold, XAU-USD is a spot gold. So now we have gold futures available for trading. So the charts are kind of similar, but the movements might be worth a lot more. So you have to check it out. Perhaps check it out on a demo before you start trading it on a live. We have the US FANG index. For those who are new to shares trading, the FANG index is short for Facebook, Apple, Amazon, and Google. So this basically tracks the top performing tech companies in the US or the tech giants. So when you follow the tech giants, you're able to tell the overall market. So you can use it for trading or as an index to understand where tech is going. And so far, we have had a big sell-off in the FANG stocks. So we also have silver futures available for trading. If you've been looking for Supermicro, the stock is available for trading. So the stock since the year started was pretty much up over 100%. So I'll show you this. The year started around here. Yeah. So this was the 2nd of January. So the stock went up 118%. And so far, it has erased a majority of the gains and it's still up 28%. But this was a big panic sell-off with the stock dropping over 47%. So that's it with some of the new products on the platform. Thank you everyone for joining. Remember, we have a new episode of the Bullish Banter podcast. Not even one, I believe we have 2 if you haven't been following. So make sure to check them out on all podcast platforms, including the FX Pesa YouTube. So I'm just trying to. So let's share these. So this is the story of a trader, a Kenyan trader named Victor. who at first did borrow a 5K account, and now he has mastered trading gold. So if you want to dive into his story, then you will learn a lot from this one. So also in the prior episode, here we are looking at another gold trader. His name is Dr. Juma. He predicted that gold would likely rally to 3,000. So all he has been doing is buying gold on the dips. So whenever there's short selling opportunities, he doesn't take them. He only looks for bullish opportunities. So those are two stories that might interest you. So you might want to check them out. So also check out the latest episode of the Financially Incorrect podcast. So if you don't have an account, make sure to register using the links in the description below. If you're watching this on X, remember to visit the FX Pesa official handle and then click the link on bio. You'll have a link to register for an account. And if you're just beginning your journey and you want to learn how to trade Forex, then you might be interested in the Novice to Pro series, which is a free course that we developed on YouTube, and you can check it out on the FX Pesa YouTube channel. So that's it for the day, and I wish you a fruitful day. Hopefully, I've answered most of the questions in the comment section. So let me check. Trump warned countries that weaken their currencies with tariffs, arguing such practices give them an edge in the exports, hurting the USD. So when he speaks, USD has been very weak. Could he be playing the same game? Of course he is. So a much weaker dollar is something that he has been looking to achieve, and that can be read from his directive or push to have lower interest rates. So Fed mandate of maximum employment and stable prices. Employment might spike down, but we have seen CPI and core PCE spike up. Will Fed really look at lower inflation? No, I believe we have data, and I just showed you a chart of US inflation having moved down in the prior reading. So I don't know why you missed that. I don't know if I closed the page or if it's still open. So we already covered the PCE somewhere. Where is that? Yeah. So notice that PCE, yes, had been moving sideways, but in the last reading, we dropped from 2.9% down to 2.6%. So core is still high at 3.3%, but it shows that inflation is still moving downwards. So as a result, inflation is moving downwards, creating an environment for Powell to cut rates. And then unemployment is expected to kick higher. We went through the Twitter post and we saw that there has been a record number of firings by the Department of Government Efficiency in the US. And as a result, we expect a very small number of jobs created in February. As a result, this might mean unemployment being on an uptick. Why hasn't Euro USD covered the opening gap? Of course, the Euro has been rallying based on the weakness of the dollar. And of course, now we have seen the German spending. So good chance it will be looking to close the gaps. But for now, I expect to see more of a reaction to the ECB press conference this afternoon. So if the ECB is looking to even cut rates further, then that should be quite worrying because we could be seeing the Euro USD erasing some of the gains. So as we continue, Noniza Jack, thank you. You're welcome. I enjoy good feedback from you guys. So the euro has been quite strong regardless of the anticipated rate cut today. Can we say that the markets has not priced in the cut? Can we expect it to weaken sharply after the confirmation? I think this is highly likely. So let's just wait and see. So don't be in the shorts before we see the reaction. So let's just wait and see what happens this afternoon. So could the euro continue buying after Trump and Ukraine president meeting? Well, Germany is increasing its defense budget so that it can continue destabilizing Ukraine, as well as Russia. So it's still a very political, or I would say a politically heated session. So with this in mind, I believe that the euro has been pretty strong and it might continue being strong against the dollar. But for the day's momentum and for the day's volatility, if this ECB decides to cut rates, there's a good chance that the euro could give some of its gains back. Labor market is cooling, yet inflation has spiked up. I believe I already covered this. Inflation hasn't spiked up, and the labor market, yes, it's in trouble as a result of the firings by Trump. So in this case, we should be expecting to see a market reaction on the next set of meetings. But we know that the Trump speeches have had more impact in the markets compared to the economic calendar. So a good question. What will offer better direction in the euro, the rate cut or press conference? Press conference. The rate cut is a reactionary event. So we see a lot of reactions, people reacting, increased volatility. But then after the press conference, we have clarification. We know that the ECB is looking to do this in the future. And as a result, it gives us a much stronger direction. So remember, it only happens 45 minutes after the interest rate decision. So, hi Mark Washira, Marcelina Mwangi. Can we expect NFP to have a huge impact on USD tomorrow? Of late, the impact has been somehow muted. And Powell's comments, could they be the ultimate guide on the direction of the dollar takes? So, first, the non-farm payrolls are expected to be much lower than we are expecting. So I don't believe we'll be having 159K jobs created in February after the record number of people fired by Trump. So as a result, the wide discrepancy between outcome and what we're expecting in the markets should lead to a much stronger reaction. So in this case, we could be seeing the dollar weakening further. However, for the long-term outlook of the dollar, I believe Powell will have a much bigger impact on the trend, not the day's momentum. So, will the ECB affect GBP pairs? If so, what's the take on pound yen? I don't think the ECB will be impacting the pound pairs much. So pound yen might maintain its current trend. It might see a bit of increased volatility during the announcement, but overall, I expect this bearish momentum to continue, given the strength of the yen, and we already discussed this when we talked about the Japanese bond yields. So that's it for the day. Enjoy the rest of your day. I believe today we have overextended the session almost 1 hour. So hopefully everyone has an informed session and you guys trade profitably.